Hey, uh, hey guys, what's up? I hope you guys can hear me clearly. If you can, just say yes, I can hear you clearly. Um, is it working? Okay. Okay. It's the first time I'm going live on my own setup at home, so I have no idea how this works. So if I'm doing something stupid or if I'm doing something weird, please, I think it got cut also in the middle, so see, I don't know what I'm doing. But again, this is the first time I'm going live. I have no idea how this works. But again, let me see what I can do. And today, what we're going to do is we're going to discuss the Zomato IPO. Now, a lot of people have been coming to the Avalon Scenes app. They've been listening to my IPO reviews. So I do these weird IPO reviews once, if there's a very good IPO that is coming out, I do it every Saturday at 7 p.m. Apart from that, I also, yeah, it's a green screen. Apart from that, I also sit every day or during market days at 4:30 on the Scenes app, and then we start doing that as well. Uh, so now for all the people who've been on Scenes have somehow figured out this and have somehow understood the Zomato IPO, but I'm doing this video for all the people who've never seen this before. So I'm trying to do something like that from that perspective. Again, first time I'm using this setup, green screen, little old school, but let's see how it works out. Okay. Again, I'm looking at the comments as well, so you can feel free to stop me anytime you want. Okay. Whew. Okay, let's see if this works. I'm going into presentation mode. Oh, okay, beautiful. This worked. You guys can see the presentation now? It should come. Just let me know. I'm just gonna do it a little slowly because I don't know whether it's gonna work or not. दिख रहा ना presentation? Okay, let's move ahead then. Now, what we're going to do in this episode is basically we're going to talk about Zomato. For all the people who have heard it on Scenes, you don't have to actually be here, but it's a good revision if you want to help other people out as well. But in this episode, we're going to do a proper Zomato IPO review. And boss, there is a wealth of information coming in this. A wealth of information. Lot of information I'm going to put in this. Now, it is good for you to understand how the industry is working. It is good for you to understand how the industry has been working in the past, what is the future impact of this industry, and what is Zomato's impact on this industry as well. So, sab kuch dekhenge. Let's go it one by one. Okay, I just made this presentation today, but I will share it with you guys. See, I have not spent a lot of time designing the presentation. I don't believe I should spend too much time designing the presentation. What I am doing is I'm just going to put as much value as possible for you guys to understand. Okay, I don't like putting too much fluff here and there. Utna time nahi hai mere paas, but I can come and just give you value. Now, it is very important to understand who is running this IPO. These people are called BRLM, okay, or in full form, it's called Book Running Lead Managers. So it's very important to understand who's running the IPO. For Zomato, we have a lot of book running guys. Two of them from India are Citibank and BofA. BofA is actually Bank of America. And for global coordinators, okay, if you look at the top part, the global coordinators are Credit Suisse, Morgan Stanley, and Kotak Investment Banking. So this is very important to understand. Now, what is the main crux of this IPO? Okay, what is this IPO? There are two types of things when it comes to an IPO. One is a fresh issue, okay, which is the initial public offering. There's a fresh issue, and there's other thing called as OFS or offer for sale. Now, for all the people who don't know what offer for sale is, I'll tell you what offer for sale. Offer for sale basically means someone, okay, in the company is taking an exit. Exit matlab he's selling his stake obviously to the people, which is you guys, but that money will go into his bank account. That money will not go into the Zomato's bank account. Now, ideally, if we are shareholders or if we are investors, we want as much money as possible from the IPO to go back into the company. Why we want the money to go back into the company? So that the company can use it for growth, so that the company can clear out its loan if it has any loan, and it can use it for growing the company even more. And if the company grows even more, who's going to benefit? Me and you, because shareholder return will slowly go up as well. Now, this is the two types of thing. One is the fresh issue, which is what we should bother about more because we want more fresh issue. The second is OFS, where it goes into someone else's bank account or into someone else's pocket. Now, in this issue, if you look at it, we have this entire issue of Zomato is 8,250 crores ka issue at a face value of 1, not 10. So 8,250 crores ka IPO they're doing. They want to raise this kind of money. Now, out of this 8,250 crores, 7,500 crores, Okay, 7,500 crores is going back into Zomato's bank account, which is good. We want most of the money to go into their bank account so they can grow. The remaining 750 crores, okay, there is an offer for sale of 750 crores, and we will come to who's doing that. But 750 crores is an offer for sale where it will go into someone else's pocket. Now imagine this, Zomato is coming into the market. They're raising 8,250 crores. Out of that, 7,500 go into their bank account for growth, which is good for us. Remaining 750 crores goes into someone else's bank account because he's like, I helped you guys in the start. Now I'm taking my exit. मैं हाथ बंद करके I'm leaving. That's it. That's what he's doing. Now, issue price is something that has not been revealed yet. A lot of people are asking me, where can I apply? When is the issue price? What is it? Is it 40 rupees? Is it 50 rupees? Is it 100 rupees? Abhi tak issue price has not been revealed yet. It's still the DRHP. When they do the RHP, once it gets approved, we'll come to know what the actual price is. But people are predicting it's anywhere between 40 to 60 is what people are currently predicting. Okay. Now, objective of the funding. What is objective means? Why am I raising this money? You'll ask me, right? Shashank, Zomato has so much money. Okay. They've been raising so much money from different companies. They've been constantly in fundraising mode and they're almost like $1 billion company, a multi-billion dollar company. So why are they coming in an IPO and raising so much money? Usually when an IPO happens, a lot of people try to take exit when it's a startup. But here, not many people are taking an exit. Only one person's taking an exit. Everyone else is actually, taking more money into the company for growth. Now, out of that 7,500 crores that they are raising, 5,625 crores is going to be into the company. It's going to be funding for inorganic and organic growth and retention. Basically, they are going to put out of that 7,500 crores, 5,600 crores is going only for growth. Now, think about it. Put it in the comments as well. If it is going, if almost 90% or almost 80% of their money is going back into growth, is it good or bad for us? Think about it and tell me why. Okay, is it good or is it bad for us? If more money goes into the company's growth, that means the company is going to grow. If the company is going to grow year on year, that means our money is going to grow as well, and our shareholder price of the company will also start growing slowly. And if the share price goes more up and up, it is good for us because we make a lot of money as well. So that's how it works. Remaining money, apart from the 5,625, the remaining amount of money goes for general company purposes to pay salaries, etc. etc. Okay, so we understood what is happening. Now remember that OFS we spoke about, which is offer for sale, where someone is taking the money and keeping it in his bank account. Now that company is known as InfoEdge. Okay, InfoEdge currently owns around 18.55% in Zomato. I have no idea why they're selling their stake of 18.55. If I show you who all are the investors in Zomato, there are so many big people in Zomato. But again, I don't know why InfoEdge is exiting 18.55%. Almost entirely 18.55% they're exiting, and they're taking 750 crores away from it. Maybe there's some internal issue, maybe there's something else that we don't know about. But basically what they're doing is they're taking that money and going away, and they're giving 18% back to you guys. Okay, so this is what is happening. Look at the number of equity shares they hold. The number of equity shares they hold is around 124 crores. And 18.55% is what they have, and they're selling it in this IPO and telling Tata bye-bye. Now, InfoEdge is also a public company. It is also, it's called Naukri. It is a public company. InfoEdge also holds stake in policybazaar.com, which is another IPO that is coming soon. Now, InfoEdge shares also rallied up. I don't know whether you guys remember this or know this, but InfoEdge ka shares also rallied up when this happened, when the Zomato IPO news got revealed that they're doing an OFS of so much crores. But again, it is good for this company because InfoEdge takes this 750 crores, puts it in their bank account, and they're very happy about it. Okay. Next. Okay. Now let's go through something that has happened with Zomato from a long period of time. And what is this? Funding. You know that Zomato has been raising funds from God knows when. They've been constantly raising funds throughout. And let's look at a small history of how they've been raising funds in this situation. Okay, just give me one sec. Abhi bhi lockdown, maybe there's an Amazon guy coming. I can't help it. Yeah. One second. Yeah. Now let's look at the funding history of Zomato. Now let's understand why Info Edge has so much percentage stake in Zomato. Okay, let's understand that from a different perspective. During 2010 to 2013, in the early days of Zomato, okay, जब नया नया Zomato आया था, in the early days of Zomato, what happened was Zomato had raised approximately 16.7 million from InfoEdge India, giving InfoEdge a 57.9% stake in Zomato. In 2013, it raised an additional 37 million from Sequoia Capital and InfoEdge again. In November 2014, Zomato completed another round of funding at $60 million at a post-money valuation of 660 million. And this is in 2014, guys. Okay, again, in this round, there was IV Cap, there was Sequoia, and there was InfoEdge again. Now, InfoEdge, okay, during 2010 to 2013, what time pe InfoEdge had gone and taken more than 50% stake in Zomato. So ideally, you can also say that InfoEdge was a majority stakeholder in Zomato, and they had almost, it's their company, they had more than 51% stake. So InfoEdge was very high. See how much they have right now. Now they have around 18.55, but when Zomato started off, they had around 58% in Zomato. Wouldn't you say? Now, how much did they invest approximately? If you look at it, they invested 16.7 million from InfoEdge in the first days. That's around 100 crores. Then again, in the next follow-on rounds, they would have put another 20, 30, 40, 50 crores. Max, you can catch around 150 crores they would have invested in the Zomato IPO. Currently, they're selling that 150 crores for 750 crores. Kitna percent returns? You guys calculate. So that's good, right? The investment was good the way you see it. Okay. Now, if you look at it in 2015 April, InfoEdge, Y Capital, Sequoia led another round of funding at $50 million. This was followed by another 60 million round by Temasek. Temasek is a Singapore government owned company along with Y Capital. It doesn't end there. Okay, it's still not over, don't worry. Uske baad, in 2018, okay, Zomato raised another 210 million from Alibaba. Just look at how much money they've raised. Another 210 million from Alibaba's payment affiliate called Ant Financial, Alipay, which is Ant Financial. Ant Financial received an ownership stake of 10% of the company as a part of the round, which valued Zomato at $2 billion. Okay, then Zomato also raised another 150 million from Ant in earlier 2018. So totally they raised 200 plus 150 million. So there's around 360 million that they raised only from Ant Capital. Then they again raised another round from Temasek. In October 2020, they raised a Series J round of 52 million from Quora, a US-based investment firm. And quite recently, in Feb 2021, Zomato raised $250 million from 5 investors, including Tiger Global, at a valuation of $5.4 billion. Now, how much is $5.4 billion? Okay, that's somewhere around what? 7 5s are 35, around 40,000 crores pakad lo. Approximately. I'm just saying, around 40,000 crores is what the valuation of Zomato is in the last round as of Feb 2021, abhi. Okay, just now. Now, if you look at this, there are two ways. Now, let's understand some basic fundamentals of a company, how it works. There are two ways a company can raise money. What are the two ways? One is equity and one is debt. Now, debt means taking a loan from the bank. Okay, so I need 100 crores for expansion. I will go to the bank. Bank will be like, okay, Shashank, your company looks good. Let me give you some loan. Let me give you 100 crores nahi dunga, 80 crores dunga terko. I'll be like, cool, awesome. Give me that 80 crores. And they'll be like, okay, but your company is good. So I'm going to take around 15% interest or maybe 10% interest or 12% interest per year. I'm like, done, bro. Give me the money. I won't run away to London or wherever. Give me that money. Let me pay you back interest. But my equity, nothing. Haath nahi laga hai. No one's touching my equity. But in Zomato's business, what they did was they kept raising funds. They kept raising funds. They kept raising funds. They kept giving equity away in exchange for money in the company. They did not raise debt at all. Okay. Any doubts, any questions you can ask in the live chat. I'm watching it while we talk. But they started raising money. They have no debt. They have zero debt, Zomato. But they kept giving equity to take more money to grow their company. Now, there are a lot of cases where people would say, is this good or is this bad? For a fast growing company, it is very difficult for you to go take debt, okay, and then start paying interest, especially when you're not making revenue also. Okay, Zomato is not a profitable company. We'll come to that later. But for a fast growing company, it's easier to go give your equity and raise money. But then now you'll ask me another question saying, Shashank, these guys kept raising so much money on almost on a monthly basis or a yearly basis. They raised 2-3 rounds. Wouldn't this dilute a lot of promoters? Dilution matlab, wouldn't my stake keep going down? My percentage in the company keep going down? That's exactly what's happened. Okay, if you keep raising, obviously the money is going to go down. Now look at this thing. This is all the investors that are there in Zomato currently. Okay, all the people who are there in Zomato currently. Look at InfoEdge, it has 18.7% stake. Okay. Uber, okay, has 9.2%. Can anyone tell me why Uber has 9.2%? You can put in the chat. This is going to be a very interactive session, so I'm not going to structure it like, okay, I'm just coming, papa, papa, bol ke nikal raha hu. I'll take some questions from you guys as well because it is something that you need to learn. So, do you guys know why Uber is there in this? See, MD Hamad is asking why does Zomato need so much money? Because Zomato was playing in a hyper competitive field. At that point, Swiggy was also there. So when you have to fight against another company, which is Zomato and Swiggy, you need to start acquiring a lot of customers. And at this point, there was not only Swiggy, there was something called Uber Eats. Okay, there was something called Food Panda. There was Tiny Owl. You remember these companies? There were so many companies at one point. So a hyper fast, hyper growth company to win needs to raise money so that they can capture audience like me and you. By giving what? By giving discounts. Yes, Uber Eats. A lot of people are putting on the comments saying Uber Eats. That's right. Uber Eats, Zomato had acquired Uber Eats and in return they had got around 10% stake. Okay, now they diluted to 9.2, but they had got 10% stake at that point. Alipay and Ant Financials. Alipay is Alibaba, Ant Financials also Alibaba. Both of them have around, I mean, if you accumulate them because they raised two rounds from them, they have around 16% stake. Imagine the amount of money that they'll make now if the IPO goes for a success. All these people are going to make a lot of money. After that, there's another fund called Internet Fund, which is at around 6%. Now look at this. InfoEdge, Uber, Alipay, Antfin, Internet Fund. 1, 2, 3, 4, 5. After 5 investors, the sixth highest, no, not even sixth, sorry. Sixth is SCI Growth. The seventh highest investor, which is Dipinder Goyal, 5.6, is the founder. So the founder of Zomato has only 5.6% stake in the company. Now again, this comes up to more questions saying that Shashank, is this good or is this bad? I'm trying to understand the IPO market. I'm going to teach you guys how the IPO market works. I'm going to teach you guys how the stock market works at the same time. Now you'll ask me, Shashank, is this good or is this bad? Now usually in the stock market, if the promoter holding is high, okay, if the promoter holding is high, then it is considered a good sign because the promoter has skin in the game. So he's going to work hard for us to grow our money. And when the promoter holding is high, don't forget this. If I have 30% stake in the company and the promoter holding is high, when the company issues dividends, okay, the promoter also gets the money as dividends. So that's like a bonus payout for him. But if you look at Zomato, founder only has 5.6% stake, which I would consider a nice red flag. Okay. That is how you need to understand how companies work. You need to understand how IPOs work. Now, Dipinder Goyal, who's the founder, has only 5.6% stake. And then remaining, you can see all the other people who have the stake. Sequoia Capital has 1.3, etc., etc. Okay. Now, let's look at how Zomato is making money. And there's something that most of you all didn't know how Zomato was making money. So let's look at that. The first way that we all know how Zomato makes money is something called food delivery. Obviously, we all know that it's food delivery, right? Now, how does food delivery work? Food delivery basically works. Now, if you look at every industry and how it's valued or how the metrics work, say, for example, you look at pharma industry, you have APIs, you have formulations, you have exports, you have imports. You look at chemical sectors, there also there's something very different. If you look at insurance sectors, they look at how you're selling premium. I mean, how you're selling insurance, getting premium. Credit card works on transactions. How does Zomato work? How does food delivery work? Food delivery basically works on transactions, number of transactions, like people like me and you order something because we're bored. The transaction goes through, we pay the delivery cost, and we also pay Zomato the fees. The second thing which they make money from food delivery is something called advertising. Do you guys know what advertising here in this case is? Advertising basically means restaurants that are listed on Zomato pay extra money to Zomato to come on top, which is your ads. Okay, that they pay extra money that come on top, and this they make revenue from that also. So they basically go tell your nearest Shanti Sagar or Soup Sagar or whatever it is. They'll be like, do you want to come on top? Pay me so and so money. I'll put you on top. I will put you above your friend who is Shiv Sagar. I'll make you go ahead above that. So that is what advertising. Okay. Now, what are the revenue drivers? They have to increase the number of people on a monthly basis transacting. If they have say 1 lakh people transacting on a monthly basis, I'll be like, no, I need more people. So if they increase the number of monthly transactions, they make more money. Now, a very, very, very important metric here is something known as AOV. If you know how Airtel works, or if you know how the Geo works or telecom sector works, they have this very important metric called ARPU. ARPU basically means average revenue per user. Now, in the Zomato world or in the food delivery world, the major important metric here is called AOV. Okay, AOV is known as average order value. What is average order value? If I am ordering for 1000 rupees, but then someone else is ordering for 500 rupees, the average is 750. But if 1 million people are ordering at an average value of 300, if they have to make more money and 1 million people are always ordering, they have to increase the average value by giving some discounts, or just telling you, okay, you bought this Coke, I will give you another cake for 21 rupees more. They'll upsell you on something or the other. So when they upsell you like that, their AOV slowly increases. And if that increases, their money increases as well. The second thing where they make money is dining out. Now, dining out, obviously, this is Corona. We have not seen what dining out is. We don't know what dining out is from the last 2 years, but very sad, very, very disappointing. But dining out was something that they also had. Again, if you remember how Zomato was before food delivery ever started, do you guys remember how Zomato was? Zomato was basically like a discovery platform. It was basically like, okay, I want to go eat something interesting in Bandra. Where do I go? I want to eat Italian. It was a discovery platform. So I used to go on Zomato, find out where the nearest what is a damn good Italian place in Bandra, look at the reviews, look at the 5-star rating, and I used to book a table and I used to go there. So that is also a revenue driver. Obviously, now it's not doing really well because of COVID, but that is what it is. Now, the third one, which a lot of people didn't know, which even I didn't know after reading the DRHP, I came to know, is they have a B2B supplies revenue model called Hyper Pure. Okay, we will get to that slowly in the next segment. And then they have the fourth, which we all know, which is Zomato Pro or Zomato Gold. And that we have all misused a lot. We loved Zomato Gold when it released because 1000 rupees or 1500 rupees may you used to go and get one-on-one free with food, and we used to take our friends so that we get more food free. We have done that. We've all been there, so don't have to feel shy about it. Now, if you look at what it was, okay, Zomato originally was launched as a restaurant discovery platform, and basically their main idea was, I'm going to show menus, I'm going to show dishes, I'm going to show user reviews. It was like TripAdvisor in the food world. It was the largest food focused restaurant listing in India at that point. There was no one else. Swiggy came straight saying I'm delivering food, but Zomato's earlier model was not that. Now at that point, okay, as of December 31st 2020, abhi 3-4 mahine pehle, Zomato had around 3.5 lakh active restaurant listings on the platform. 3.5 lakh active restaurants are listed currently on the platform. Now, Zomato has the Zomato Pro. Now, let's see how many people are paying for Zomato Gold as well. As of December 31st, 2020, Zomato Gold has 1.4 million members and over 25,000 restaurant partners in India on Zomato Gold. So 1.4 million members are paying Zomato on a yearly basis or even a monthly basis to activate Zomato Gold. Okay. Now, let's look at what that other company is, the Hyperpure that we were all talking about. Okay. The company also has a subsidiary called Hyperpure, which is in the business of supplying raw materials to restaurants. So they do this on the side that none of you all know because they don't do ads like this. Hyperpure not only allows Zomato to better forecast demand. Okay. How they're understanding this is, chalo, abhi restaurant will apply to becoming Zomato's Hyperpure. They'll call Zomato and be like, अच्छा सुन, मेरे को कांदा चाहिए, ये चाहिए, वो चाहिए, etc. etc. Fruits, vegetables, grains, मेरे को इतना rice चाहिए, सब भेज दो, आलू ले लो, कांदा ले लो types. And what happens is Zomato goes and delivers it. Now Zomato, if you're delivering the produce as well to someone, obviously they'll come to know if you're asking, if the restaurants are asking for more, then maybe समझ जाऊंगा कि okay, अभी demand is very high. Okay, if demand is high, that means the users are buying a lot. If the users are buying a lot, I think now I should put more discounts. That's how everything is connected. It is data that helps. If you know how to use knowledge and if you know how to use data, you can actually do it well to enhance your business even more. Okay? Now, this business was started in 2019 and in 2020, it supplied to over 6,000 restaurant partners in 6 cities, which is, I would say, still undertapped, undervalued. It is only 6,000. They have around 2.5 lakh active listings, 3.5 lakh active listings. So it's going to take more time. So this is what they're going to make money from. Now, lastly, their food delivery business, which is I think their main revenue driver, is what they do to actually get commission from restaurants. One, they get commission from restaurants for every sale. They also take delivery charges from me and you. Now they also have this thing where I can tip the Zomato Zomato rider as well, and I'm pretty sure they would have taken insurance on for these Zomato riders now, because some people are claiming that we'll punch the Zomato drivers, etc., etc. I don't know, some hula who keeps happening all the time. Now, let's look at some industry overview. Let's look at some math. Okay, I like industry over because it tells me whether the thing is gonna grow or not. Again, hope you guys are not getting bored. I'm not trying to go very slow. I'm trying to keep it little fast also. But again, this is very important for you guys to understand. Now, what happened with the whole food delivery scenario? Do you guys remember Food Panda? This was there in 2012. It was acquired by Ola in 2017, and in 2009, Food Panda was shut down. Okay, Swiggy is still operational. Tiny All bhi tha. Tiny All also shut down. There's another company called Scootsie, okay, that got acquired by Swiggy in some time ago. It started in 2020, but it shut down in started in 2014, but shut down in 2020. Now, Ola Cafe बोल के भी try किया था Ola ने. Ola tried Ola Cafe in 2015, did not work. 1 year they shut it down in 2016. Finished, game over. Uber Eats obviously got acquired by Zomato itself, and there is another company which most of y'all didn't know. Okay, that is operational right now. Started last year, called Amazon. Most of y'all didn't know this. There is a company called Amazon that has entered the food delivery space. Okay, I think it's they've not finally named it yet. I think it's Amazon Food or something like that. Again, not sure, but Amazon has been operational from the last 1 year. They have very few restaurants in their listing because they're still activating and capturing the market. But what they're doing is, from the last 1 year, Amazon is giving food delivery services to all Amazon users only. So only Amazon users can go on the app and apply and get some food ordering from Amazon. People like me and you cannot go order from Amazon Food yet. Only the employees can order from Amazon Food. But again, we didn't know this. They've been activated from the last 1 year. None of us knew this. From 2020, they were active and live. Now, think about this. Now, there's going to be three big players in the market: Swiggy, Zomato, and Amazon. And when there are three big people, okay, Swiggy, Zomato, and Amazon fighting in the future, who are the people who win? People like me and you, customers. Because why? Everyone's going to bombard us with discounts. Everyone's going to give us a lot of discounts. Cool? Now, look at how the industry of Indian online food service market, only online foods, I'm not talking about offline food, but what they're predicting is that the Indian food delivery business, okay, Indian food delivery business or the market is planning to become, by FY26, okay, which is 5 years into the future, they're planning, it's apparently going to become a 831 crore business, $31 billion business. Okay, the growth of this, if you can look at the growth, which is in the third column, it is around 25-26% का growth होने वाला है. The orders per month in millions is going to go up in the next 5 years to 240 million order a month. That's insane. If you just think about it, it's insane. In FY19, it was 49 million orders per month. In FY20, it was 75. Look at that growth, because we're all adopting to online delivery. Now, FY21, obviously, thoda COVID hua tha, to kam hua, but they're predicting that this is only going to grow. The average number of orders, the total number of orders per month is going to become insane in the future. Now, the average order value, which is what we all want to see, which we all like, because ye agar grow hua, so we will make more money. Either the average order value has to increase or the number of orders have to increase. It's basically one of that. Okay. Now, if you look at the average order value in FY 17, 18, 19, it was around 315 rupees. Okay. So each order per person was around 315 rupees. They're predicting it to go down in the future from 314, 307, 301, 295, and then 289 by the end of 2026. But the volume is increasing. So what people are predicting is that the price might go down, but the volume might go up. But I don't think this is true. Okay, they have their own logic and estimation to that. I feel it might not. The only way the price would go down is if a lot of discounts are given. The average order value can go down if discounts are given. If Amazon comes in and says, I'm here with Amazon Pay and we're going to give you all these discounts. If that happens, yes, the price will go down. But I feel if you capture inflation for the next 5 years, and the average food order value will definitely go up. If the order food value definitely goes up, who makes money? We make money. If you're a shareholder of these companies, or else we don't make anything. Now, some other colorful graphs, don't have to go too deep into it, but this basically shows India's GDP growth. Again, all these are from the DRHP in the IPO document. This basically shows India's DRHP growth. Don't have to go too depth into this, but basically it says we are going to become a very successful country. A lot of people will have a lot of money. In the economy is going to grow. Everyone's going to have a lot of money. And if that happens, obviously we're going to start spending. Now, if you look at how they're comparing internet users in China and internet users in India, this basically, why is this an important graph? Why is internet penetration or smartphone penetration an important graph? Is mainly because the more people that have smartphones, the more people who are used to smartphones can order on Swiggy and Zomato, or order on Zomato as well. If I don't have a smartphone, I have no idea what Zomato is also. So if the more people go into the internet penetration, the more people will come on Zomato and use the app. And we all want this. We all like this, because even for me, even for Avalon Scenes, we want more people to come on the internet, more people to have smartphones, so they can come and listen to me on my 4:30 market talk as well. So we want more penetration, and that is what people are predicting, that by 2025, almost 68% of India's population will have market penetration into internet. Good stuff, good stuff. Now, if you look at Indian online consumer, another big graph, okay, they're saying that the access to internet is around 500, the access to internet in the total population as a million. Total number of active internet users around 400 million in India are total active internet users. Out of the active internet users, around 250 people use online services like payments and banking. And out of all that, out of the total, around 150 people actually go and shop. Okay, and look at China on the same side. China is even more. So what they're basically saying, that we will eventually go towards China and like China, and we will also become very big with the market penetration. Now, this is my very sad attempt to show you the financials. That's why I said I have not made it look fancy, but this is just a sad attempt to show you how the financials work in a simplified format, because I can't keep screenshotting big finances like that. But I'll give you a simple, in your head math. Now, pay attention to this, guys. All the people in the chat who are talking about Dogecoin, please pay attention to this. That is not important. This is more important. Please pay attention. If you look at Zomato's growth, why is Zomato such a hyped up company? Why does everyone want to get into Zomato? Why does everyone want to acquire Zomato or get a piece of Zomato? Or why is Zomato going to be a very big IPO in the market? That is because the company is growing. I know it's not making revenue at all. It's making zero revenue, but it is growing, and people like growth. We all like growth. We are like, okay, they'll figure out monetization. They'll figure out how to become profitable, but let's capture into Zomato's growth story and see what growth story is of Zomato. In March 2018, the rightmost column, or if I'm this side, I don't know where I'm facing, but in the 2018 column, their income was 487 crores. Next year, it became 1,397 crores. Next year, it became 2,742 crores. Look at the jump. 500 crores to 1,500 crores almost. 1,500 crores to almost 3,000 crores. So that means the growth is extremely fast. And again, what was funding this growth? Their constant fundraising. They used to take fundraising, give discounts, and keep growing the company. And if you look at the last column, which is 31st December, as of 9 months ended, what their entire ratio was. Now, another interesting fact that a lot of people don't see are the expenses. Now, expenses in 2018 was 593. Expenses in 2019 was around 3,607 crores. Now, look at the jump. The revenue jumped 3 times. Okay, from 487 to almost 2 times or 3 times, but your expenses have jumped almost 5 times, 6 times. Almost 500% it's jumped. Okay, that means your revenue has gone up 3 times, but you have increased expenses 5 times. Why? Something's not right, or you've spent too much money that year. Okay, if you look at the next year after that, in 2020, the revenues doubled and gone to 300%, but here their expenses didn't double. Okay, that means, can you say that in 2019 they had to get extra users or extra people on their company, spend more money to acquire these customers, and now they're reducing that spend? Because from 3,600, it's not gone to 6,000, 7,000 crores. It's actually gone down. Right? It's not even 100% growth, but the revenues have grown by 100%. So is that a good sign? Can we say that it is going towards profitability? Yes, we can say that. Now, their loss, abysmal, horrible loss, too much loss. Okay, 100 crores loss, 1,000 crores loss, 2,300 crore loss. It is a pure loss making business, not a profitable business. But think about this from this perspective. Can I assume, or can I say this assumption, that if Zomato becomes profitable, will it be the next big market cap, large cap company? Can I do this justification, or can I say this is possible? Chat. I'm saying that if Zomato somehow becomes profitable with all this revenue, 2,700 crores revenue becomes profitable, do you think it will become the next big company or the next big large cap? Yeah. So if Zomato figures out how to become profitable, then it becomes the next big company. Simple logic, understood. Why not? Yes. Cool. Now, look at this next slide. This is the key to this entire presentation. This is the key why it can become profitable. Just look at this slide. Zomato has actually turned profitable on their operational metrics this year, right now, 3 months ago. Now, I know why they've done this, because they've done this to show, and we'll go through this. Okay, this is not something new. We will go through how this is. Okay, but they've done this right now. Why? Because IPO is coming. No, they have to show that hey, hum log amazing here and stuff like that. Now, see this. See, like someone said, Justin said it'll take some years, right? It'll take a lot of time. But look at this. Look at this chart. Their average order value in FY20 was 278. Okay, this is unit economics, means broken down per rupee. So every order, what happens to that? Every order they do, what is the cost behind every order? So broken down according to unit economics. Now, the number of orders that they had in millions, okay, the number of orders, they had 403 million orders in FY20. And in FY21, 9 months FY21, they had 155 million orders because of COVID. The average order value in FY20 was 278 rupees. Very less compared to the industry average. Should be a little more than 300. But it was 278. Now, uske andar, there is commission charges and other charges, which is 43 rupees, which goes away. Out of this 278, 43 rupees went into commission and other charges. Then there is delivery charge, 15 rupees. That has to be paid. Delivery charge goes away. The total revenue, okay. No, this is, wait. No. Wait. They have 278, which is their average order value. I got confused. 278 is their average order value. Out of this, they make 43 rupees more revenue from commission, and they make this do delivery charge. They make slightly more revenues. So on each order, okay, on each order that happens, they make 58.9 rupees. So every order that me and you do, the commission is 43 and the delivery charge that they take from us is 15 rupees is what we see. So 58 rupees was their 59, almost 58.9. So 59 rupees was their revenue per order in FY20. Understood? Now, out of this 59 rupees, 52 rupees they used to give to the delivery riders. The delivery cost of doing delivery was 52 rupees. Discounts, 21 rupees discount. That means every order, they were giving almost 50%. If you look at that, the total revenue was 59. Discounts was 21. So almost 40% was discounts that they were giving. Insane, right? Other variable cost 15 rupees. The total cost per order for Zomato was 90 rupees. And they were making how much? 60 rupees. So every order you placed on Zomato was losing 30 rupees. They were not making money, they were losing money because it was a growth story. Now, what they've said in the DRHP is that look at how we're performing right now. In the last 9 months of FY21, see how we're performing. Our average order value has gone up to 398 rupees. So I'm like, good, that's damn good, very good. Why has it gone up? Can anyone tell me why has it gone up? My assumption is, even I don't know exactly why it's gone up, but my assumption is that because of COVID, a lot of people are sitting at home. Now, when you're ordering food, you're not ordering it only for yourself. Now it becomes a family affair. Okay, now your father is ordering for everyone, your mom is ordering for everyone, or you're ordering for the entire family. Automatically your average order value will go up. Because pehle kya hota tha, dad used to come back from work quite late. You used to order on Swiggy, Zomato, eat in the gaps and you're done. But now your dad is sitting at home, and if you try to order something and be sly, he'll be like, "Arey, mere liye bhi order kar, why are you only eating by yourself?" and stuff like that. So all that happens. So I'm assuming the average order value has gone up because of lockdown, because more ordering and larger quantity of ordering also has happened. Bulk ordering, I would say. Now look at their commission and delivery charge. They made 90 rupees now. Okay, look at the growth from 60 rupees to 90 rupees in the lockdown. They've made growth. Okay, good stuff. Now, if you look at the delivery cost, it is 44 rupees. Now, here is the best funny part. The discounts from 21.7 have gone down to 7. Down by 3 times. The 21 rupees discount, which they were offering so much discount, has gone down to 7 rupees. Now, why has the discounts gone down? Because COVID chal raha, lockdown chal raha. You don't have to entice people to order more. So they don't actually give a lot of discounts like this. Okay, number one. 1 second. Bro, just stop spamming or else I'll have to delete you from the chat. I wouldn't want to do that, but please. Yeah, so now everyone's ordering. Okay, so now if you look at this, look at the anomaly here and why they're showing, how they're showing Zomato's profitable is they're saying 90 rupees revenue bana raha hu. Usme se 44 rupees is gone in delivery cost, 7 rupees is discount, which has gone down from 21, and other variable cost is 14 rupees. Now, is this justified? Then they're saying total cost is 66. Now I make 22 rupees profit on every order. Amazing, beautiful. Chalo, let's all make a lot of money and dance because now we're going to make a lot of money in the IPO. Understand that the discounts have gone down right now, but if Amazon is coming and if Swiggy is already there, and when the world goes outside lockdown, post lockdown scenario, their discounts will go back to 21 if not more. So currently I would still add the same 21 rupees as discount and then calculate the profitability if they're still profitable or not. So that's 44 rupees or 45 rupees on delivery cost, another 20 rupees on discounts, which is 45 plus 20 is 65, plus another 15 rupees in variable cost. Okay, that 65 plus 15 is around 80 rupees. Okay, I would say if you calculate all this, it will become 80 rupees. They're making 9 rupees per order. Is it still profitable? Yes. I'll assume that because the competition is higher, maybe the delivery cost will go up by 2-3 rupees, maybe the discounts will go up by 2-3 rupees. Sab kuch karke, there'll still be net loss zero. Even if I add 10 more rupees in the unit economics, their net loss will still be zero. That means they'll be cut to cut. Correct? Now, if that happens, okay, and if Zomato can actually crack that and do it on a yearly basis or a monthly basis or even a quarterly basis, you have a multi-bagger on your hands. I'm not going to take that 7 rupee discount as the face value because even I know that's not real, but I will take 20 rupees only. I will take 45 rupees on delivery cost, 20 rupees on discounts, and other variable cost also at same 15 rupees. It still comes to 10 rupees of profitability. This is how you understand. Okay. Now they'll be profitable by 8 rupees. I am saying chalo wo 8 rupees bhi hata do. Even assume that something else came up and they lost that 8 rupees. Still, Zomato is not a loss making company. There'll be 0 rupees. Net profit 0, net profit, no loss, no profit. Is that good for us? It is definitely good for us from a unit economics perspective. Now, let's see another beautiful data. I hope you're getting a lot of information, guys. I hope this is helping you in some way to gather a lot of information and look at the world in a different way. Look at the other one, Zomato versus Swiggy. And this is something that we all want to know. What's happening between Zomato, what's happening between Swiggy. Now, Zomato makes a revenue of 2,300 crores. Swiggy makes a revenue of 2,500 crores, 200 crores jada. So actually, if you think about it, Swiggy is number one in the market in terms of revenue. Advertising expense, Zomato spends more, 1,300 crores, and Swiggy spends only 1,000 crores on on advertising. But look at the next part, employee cost. The employee cost of Zomato is half of Swiggy. The employee cost of Zomato is half of Swiggy. Now, I don't know why Swiggy is over hiring. I have no idea, but it's double. That's what I can see from here. The total expenses, if you look at Zomato, it's 46 and Swiggy is 66 at almost the same revenue. Okay, almost the same revenue. Zomato is making 2,300 crores in revenue and has an expense of 4,600 crores, whereas Swiggy with the same revenue has 3 times more expenses. Don't you think that's a bit too high, Swiggy? Yes, you're actually spending more, Swiggy. So be careful about that. And this is in 2020, I'm talking about FY 2020 math, okay? Now, if you look at the net loss, 2,500 crores Zomato and 3,800 crores Swiggy. So Swiggy is in a big loss and they're spending a lot. Now, if you look at 2019 statistics, okay, you're saying, okay, this is 20. Let's look at 19 statistics. Zomato was leading at that point by 100 crores. They had 1,200 crores revenue. Their advertising expense was more than Swiggy. Their employee cost was the same. 500 crores each. But here, they jumped by 100 crores. They jumped by 500, 600 crores. Insane. So yeah, this is how Zomato and Swiggy look at. Basically, both Zomato and Swiggy spend almost the same amount of, they spend the same amount of advertising costs. So it's not like someone's spending a little more. Both are spending advertising costs and advertising expenses, other expenses like discounts, both are almost doing the same. But the bigger difference I can see here is that the employee cost is double on Swiggy as compared to Zomato. Why? वो Swiggy वाले को भी पता है, we don't know. Okay. Another thing, now let's look at the valuation metric. Now this is slightly confusing for people who don't understand finance, but let me just dumb it down or make it in a simple format that you don't have to think so much. And I'll tell you why people look at some metrics. Okay, this is just to assume and understand what will be the share price of the company. What they're saying, okay, we know that recently in the last round of fundraising, how much did they raise? $5.4 billion. $5.4 billion we calculate is around 40,000, 41, 42,000 crores. Okay. Now, if you look at this, total number of shares in the pre-IPO for Zomato is currently standing at 666 crores. This is the number of shares that they have currently in the company, is 666 crores. Lot of shares in the market. Now, the per share value in April, assuming it is 60 rupees or 58 rupees, the market value of this company before the IPO, okay, before the IPO, the market value of this company is 38,634 crores. So it is a 38,000 crore company before the IPO. Once the IPO happens, which is a 7,500 crore fresh issue, the total market value of this company is going to be 46,000 crores. Okay, their FY20 revenue is 2,600 crores and approximate post IPO net worth is around 15,000 crores. So what they're saying, market cap to sales. So what people usually do is they calculate what is the market cap of the company and divide it by the sales to figure out whether the market cap versus your sales is it justified. Are you doing less sales, but is your share price going too fast, too high? Then it has to start correcting. So this is how they find out the valuation. But again, I don't have any way to figure whether this is good or bad. Okay, there's no way to understand whether this is good or bad. The reason why I don't have any way to understand whether this is good or bad, because there is no other listed company in the food delivery space for me to track whether this is good or whether this is bad. Okay. Also, what I'm going to do is I'm going to share this presentation with you guys. I will share some links also below after this thing gets over. I'll share the link in this YouTube video for you guys to go and start reading about this. Okay, so you will see all this. Now, finally, we come back to the final question. Okay, this is the final question. So let me go back into full screen so you can see my face completely. Okay, final question, guys. What do you do? What is your call? Do you want to buy or do you want to wait? By the way, the debt of this company is zero. So now I'm going to take 30 seconds break. Okay. And I'm going to see the comments that come. I want you guys to tell me, Shashank, is this a good buy? Or I think, you know what, we should wait a little bit and then check it out later once they go into profitability, because now they're not making profit. You guys tell me whether it's a good buy or what. I'm going to take a 30-second break. By the way, that's the end of the presentation also. No, so a lot of people are comparing Jubilant Food, which is Domino's, to Zomato. But the thing is, there's a slight difference here because Zomato is a food delivery company, whereas Domino's is a food making company. They make pizzas. So if Zomato had their own, they don't make the thing, they're just a broker in the middle. Okay. Now, see, there are a lot of people saying buy. There are a lot of people saying wait. There are a lot of people saying buy for listing gains. Come on, guys. If you've seen me from long enough, you wouldn't recommend buy for listing gains. But yeah, I'm pretty sure buy for listing gains he hoga. So there's two things. Buy for listing gains can happen because the hype around Zomato is immense, number one. But also because the issues is so big, 8,400 crores, maybe they won't get subscribed, or maybe they'll just get subscribed by 1x. I don't think they'll go more than that. But again, we don't know. We have no idea. Let's see, listing gains ho sakta hai, but I don't think you should ever optimize for listing gains. That's not something that we do. Now, if you ask me how I would look at things, okay, there are a few red flags that I want to tell you guys. One red flag is the Zomato's founder has only 5.5-6% stake. Not very attractive for me. I want a founder who has more stake, a promoter who has more skin in the game. Now, I also read another article which said that if Zomato does really well, Dipinder Goyal had said that I won't take salary for 18 months. I want the company to grow. And if it grows, I will take some stock options as bonus and increase my stake from 6% to maybe 7.78%. Even if he does all that, even if they do buyback after a very long period of time, it'll take many years for this guy to even come to 25% minimum shareholding. So that is one thing that I look at from a negative perspective, that this guy has very less stake, number one. Now let's look at the positive side. On the positive sides, one, they'll be equipped with 7,500 crores of capital to fight Amazon and Swiggy at the same time. So Zomato is getting ready for the fight. Also, now Zomato will be in the news for a very long period of time, or it'll constantly be in the news because now it is a stock listed company also. Correct? It is a stock listed company. Looking at Deepinder Goyal. Okay, now the other thing what I want to look at here, I don't know whether it's positive or negative, but just look at it. Do you know that most of the investors apart from InfoEdge haven't sold? Why didn't Uber sell? Uber could have easily sold right now. Why didn't Sequoia Capital sell? Why didn't Ant Financials and Alibaba sell their stake and take some 1,000 crores and walk away? Why didn't none of these guys sell? Now there's two options to this. One, they believe that this will do well, and Deepinder wants to obviously make Zomato even a much bigger company, more than 40. He may be a 1 lakh crore company. So are they staying right now for the long term vision? That's something that Deepinder might have told them, but we don't know. Possible. Or the other alternative, by the way, don't forget the other alternative is, what if Zomato lists tomorrow and it's not doing really well? Okay, maybe it's normal. Ha, fika pad gaya. Matlab, it's not doing so much, it's not doing too bad, it's just normal. You know what will happen if Uber, AntPay, Sequoia all start offloading their stake into the market and selling their shares? Because if you look at some funds only want returns. They couldn't care less about long-term investment. They just want returns. They're invested at A, they want to exit at B and make profit between A and B. Now there are so many funds, and these funds are almost 80% of the entire company. Okay, now currently after the IPO it will be different, but there are so many funds there. What if they start selling all their stake? What if Sequoia comes and sells their stake into the market? Okay, what if Uber comes and sells 10% and starts offloading everything into the market? What will happen? The number of shares in the market will increase, and if that increases, what will happen? Automatically your share price will fall down even more, right? And it is bad for whom? It is bad for me and bad for you. 110% is bad for me and bad for you. So I want to wait and check the RHP. Okay, so if you look at, there's two sides to a coin. Okay, one side is, why didn't they exit now? They just had a chance to exit now. Okay, but if Zomato does well, they won't exit. But one day or the other, you and me both know they'll exit. But when that day will come, we don't know. So either there is something that we don't know that everyone's waiting for. Okay, we can take a shot. But if they start dumping the shares, then it's going to be a big issue. That's the way I see it. Okay, now the other positives are that they are ready for the fight. They'll be capitalized with a lot of money. They're a debt-free company. And from the looks of it, if everything goes well, they can move into profitability. And if they actually become profitable and EPS gains start kicking in, man, sky will be the limit at that point. Okay, you'll make a lot of money. That will happen. But again, there are plus points and negative points, as I have mentioned. Now, if you ask me, I would invest in the IPO, but not a very big amount. And I'll tell you why. I'm looking at it from both perspective. What if the IPO becomes a success? Okay, let me look at it from a successful perspective. I can invest a small amount. Okay, maybe just, maybe a very small amount that I want to risk little bit. It's not a bad company. The way I see it, it's not a bad company, but I will not go heavy on it. I will go medium on it. I'll tell you why. If Zomato IPO becomes successful tomorrow, and if it is a successful stock, okay, and it lists at 60 rupees and now it is at 120 rupees, assume. If it becomes 60 to 120 rupees, there will come a point where all the existing funds slowly will start dumping their stake, and maybe new people will start taking up their stake. These FIIs and DIIs usually do that. Sequoia might sell their 1% stake to some mutual fund. But what will happen is, some guys will offload their stake and the other people will onload the stake. Okay, so when that happens, the share price will go down slowly. That is when I start averaging even more, because I know for a fact whether the share price goes well. If the IPO does well, then someone will exit and take the money out. Now, if the IPO does bad, assume the IPO goes bad, these investors will lose their patience and still exit. And this time there won't be anyone to buy it, because these funds will be like, "Arey, acha nahi hai, main kyun kharidu? I'll buy it when it's fundamentally strong later." If it goes down, the share price will go down, and if the share price go down, who's happy? Me. Because that's when I go heavy and start averaging. Because I know eventually it's going to go up, because fundamentally company is strong. Abhi ye jo ho raha hai side mein, okay, fundamentally the company is strong, but all this that is happening on the side, which is the investors dumping their shares and stuff like that, is something that will happen and go away. In the long scheme of things, in 5 years perspective, that doesn't matter to me. Fundamentally, it's strong. So I am going to do a small investment, medium investment, not a heavy investment, and I will watch. I will wait for the time where someone starts exiting, and when they start exiting is when I will start slowly picking up more stake. There's a very high possibility that this IPO will go for a success because of the hype that is surrounding it. Again, we will come to know. But now, I want to see the RHP for one reason. Sometimes what happens in the RHP, all these investors might have a lock-in period. Most of the times, investors have a lock-in period. Deepinder has a lock-in period for 3 years. But I want to see if the other investors also have a lock-in period. Now, if the other investors have a lock-in period of say 1 year or 2 years or 3 years, then I will invest slightly more heavy. Not full heavy, but medium heavy. Because then I know they can't dump and I just need Deepinder to come and perform and do really well. Okay, do more ads and whatever. Just give me my returns back. So I want something like that. Again, I'm trying to make you understand all the sides of the coin, not just heads and tails, but I'm looking at head, tails, very bad example because there's only heads and tails, but I'm trying to make you understand everything from that perspective. Again, hope this is good. Lock-in period is basically that people lock in, not locking, lock in. Lock-in period is basically when the share goes for an IPO, you cannot go sell your stake for a particular amount of time. So 1 year or 2 years, you cannot sell your stake at all. Understood? Okay. Guys, this has been a very long presentation of 56 minutes. But again, my main perspective is, have you guys understood the entire IPO? I will put all the links below after this. Have you guys understood the IPO? Are you guys learning from this video that I've made? So I hope you guys understand. I hope you guys like that I'm back on AML and I'm back giving you such valuable bombs. I hope you're learning every day something new, something more, something amazing. And I try to make it as simple as possible for you guys to understand, even with people who understand what stock market is and for people who don't understand what a stock market is. When's the IPO? We don't know because they've just uploaded the DRHP. So anyway, when it gets announced, everyone will come to know. There'll be enough time for you to go buy it. Okay, I've put some links below. You can go through that and check, but I will add more links because I have some reading articles for you guys to go check out. I'll give you the link for this PDF also, so you can go check out that as well. Again, another two things I wanted to tell you guys. Small case review is already done in the last Tuesday when I came. You guys can check out the small case review. The updated small case links are below, but the review was there in last week, so you guys can check that. What's your research source? Research source is Capital Mind website. There's a beautiful article written on Zomato over there. I have gone through the DRHP. The DRHP is around 450 pages, but I know how to go through them very quickly. I can actually do one nice episode for you guys maybe next week on how to read an annual report or how to read a DRHP. Because a lot of people don't know how to read an IPO document. So I will teach you that maybe. That's possible. I come here every Tuesday at 8 p.m. to give you gyan like this. But I also come every market day at 4:30 p.m. sharp, sometimes a little late, but 4:30 p.m. ko main aata hu, on Avalon Scenes, which you can download it in the link below. That's we're not launched it for iOS yet. It's going to come out soon, but Android users can definitely come. I think I'm tired now. I'm very tired. There's no IPL to go watch also. So I have a lot of free time now, so I can come and actually do this for you guys. But again, I hope you guys liked it. I hope you guys enjoyed it. And if you liked it, please, for my sake, just like it, because I see 400 people and only see 200 likes. It takes a lot of effort to come and do this. So please like it, subscribe this channel, subscribe my main YouTube channel. And I think I will see you next Tuesday. Till then, stay safe. Don't get COVID. Sit at home and take care of your loved ones. And enjoy this period. Okay? Thank you guys. Signing out. Shashank. See you guys. Bye.